Come satisfy your appetite for wealth with baking profits. Now, here's your hosts, Mike and Brad. Hey, how's it going, everybody? Welcome to another week of Baking Profits. We're your hosts, Mike, aka DeFi Donut.
And I'm Brad, aka the Bread Maker.
And today we're going to talk a little bit about options trading, investing in your 401k, and really just, how everybody has so much money right now.
I need to get in on some of that.
I know, it's a little weird, right?
Yeah.
If you'd like to, you can follow the crumbs on our socials, at Baking Profits, at the Bread Maker, at Bread Bites, at DeFi Donut.
And be sure to subscribe wherever you get your podcasts.
And tonight we are drinking Old Elk. It's from Colorado, and it's pretty smooth.
Empty. Shit's empty.
It is empty. That's always a good sign when we start our podcast off with an empty bottle.
Yeah. It usually means it's pretty good. I'd probably put this baby in the top 5.
Oh, snap. Okay. Yeah. I mean, it's so hard for me to remember, those previous bottles, but this has been pretty nice.
Yeah. I mean, I said last week's episode, what did we drink last week?
Oh, no. The key. We had the key.
The Blade and Bow.
Blade and Bow.
I did say that was top 5, but that has been bumped out of the top 5 now. And Oak and Elk, or Old Elk, is, goddamn, I'm butchering this. Old Elk is now 5th. Yeah. I will not put it above 5th, but it's pretty solid. I would buy it again if I needed to buy it again.
I think that's good. Right.
Yeah, I will buy it again if I need to buy it again, but there are options that are above it.
Nice.
So we got one last episode next week to decide.
Yeah, I think
what's up.
I think a lot of people don't really know that this is a 10 episode season. We never really talked about it. I know, or at least we never really talked about it publicly. We've always kind of thought in our mind like this is going to be 10 episodes and we're going to drop it and maybe pick it up again in the future when things are going good. But yeah, for this season, it seems like the theme has really been just, crypto, introductions to crypto, different facets of crypto and DeFi in general, and how it's kind of blending with that traditional finance. Not to say that next season will be anything different. It's really, our podcast has always been finance related. But yes, for those of you that are paying attention, this is episode 9, and we have one more after this.
Yeah, once we get to 10, that'll wrap up season 1, and then we'll pick up season 2 a little bit later in the future. But I'm excited to wrap this up and kind of just rank our. I think we should do like a top 10 ranking of our whiskeys for sure. But yeah, it's been fun. It's been fun to do the podcast. Kind of BS back and forth, share our thoughts, feelings, education, all that kind of stuff, over the past several months to everybody through, a little bit of a different medium and different format than what we usually do. So, it's going to be cool to kind of reminisce a little bit about this first season and how it went, and then, look at, improving upon that in future seasons.
Yeah, I think it eliminates a lot of the pressure of just having to think like, what are we going to fill this time with? I never wanted it to be fluff. I never wanted it to be manufactured content. I felt like, everything that we've talked about have been things that you and I have talked about. And that's why the conversations were able to go for so long. And, I think if we were on episode 105, that episode probably would not be as strong conversationally as episode 5. So
true.
I think having it in seasons and breaking it up is good. And I think it'll just give us time to focus more on some of the other things that we're doing and also come back for season 2 with a little bit more content in a variety of ways.
Yeah, I agree. And I think, maybe in the last episode, we'll be able to tease some of the stuff that we've been working on, so hard on the background. And part of the reason why we feel like, wrapping up at episode 10 of, season 1 will be good and give us the opportunity to spend a little bit of time, continuing to build and create and release the things that we want to release. And then we'll be able to pick up season 2 once we've, kind of gotten in that full swing of things.
Absolutely. So I know we want to kind of start this bad boy off with some options talk. You have been diving back into the world of options trading. I think, we've mentioned it a few times on here. We traded a lot of options. We've, had a business that was focused around options before. Cinnamon Toast algorithm is built off of options trading, but I'm interested to see, why are you going back? Like, what is pulling you in that direction?
Yeah, I mean, there's just this itch to get back into options trading. I mean, we did it for so long, and then we kind of stopped, and we really made this big shift into crypto. And really, I haven't had the opportunity to look back. It's kind of just like, a lot of stuff nowadays is very like nostalgic of the 90s and 2000s and stuff. And I kind of think of that in a way from an option standpoint a little bit. I'm getting a little nostalgic of like, man, we used to trade options. We were killing it with options. It was a lot of fun to trade options. Obviously, a little bit stressful as well because the movement in the options trades can be kind of drastic with small movements in the stock market. But I think we really kind of made this big shift from stocks to crypto. We both did it at the same time, and it was kind of like it wasn't like a transitionary period. It was basically like, all right, we're no longer really trading stocks except for long-term stuff. And we just flipped to crypto. And then we've been in crypto for 3-4 years now and really haven't spent any time trading stocks. And it's just like, it's kind of funny because I went back to a lot of the stocks that I was trading 3, 4, 5 years ago. And I'm like, my God, man, these prices are insane. Like the prices of some of these stocks that I used to trade are like 100% higher than what they were when I was trading them 3 to 4 years ago, which is obviously kind of crazy. But, obviously we've had a, kind of a bull run and stuff since, we really got out like a little bit before, COVID happened and stuff like that. And then we had that big boom, post COVID. So, I think a lot of it comes down to nostalgia. A lot of it comes down to, we've learned a lot, just technical analysis wise, trading, analyzing, things like that. And then I think a discipline, we've learned a ton from a discipline standpoint, just in the sheer fact that crypto is way more volatile. So we've learned how to manage our risk in crypto. And I'm like, if you can manage your risk in crypto, stock market is a cakewalk to managing your risk, even though options is obviously more volatile and a little bit more precarious than the stock or than crypto is. But still, if you're, I think we've just learned a lot from crypto, and I'm like, I kind of want to apply this to options trading on the stock market again and play around with that. Also, there are some up and coming platforms that offer options trading in crypto. And so I'm like, man, if I can get back into this in the stock world, it could be beneficial for crypto, could be good for educational content, could be good opportunities for our, user base and our community to, dabble in something a little bit different as well. So it's been fun just getting back into it. I mean, I'm only a couple weeks back into, options trading and into that realm again, but it's been fun so far.
Yeah, I will say, I mean, I definitely have the itch, and I think that crypto has opened that door back up. One of the things when we transitioned from stocks, like for me, it was very much like day trading penny stocks, and moving into options, it became extremely volatile. It was like, oh my gosh, like in a matter of minutes, you could be up 10%. But really, when we have made this transition from options to crypto, on no leverage, it's obviously very volatile, but it became like a comfortable medium between stocks and options. True. But most people trade, crypto with leverage, and as soon as you add leverage in, it becomes options. And I mean, you can trade. I mean, for a while there, I was trading 40x leverage on Bitget and doing little ins and outs, and that's way more dangerous than options trading. There's so many pitfalls to options in general when it comes to just the fact that you not only have to get your price direction right, like, oh, I think the price is going to go up, but you have to also manage the time of when it's going to go up. Like, I think it's going to go up within the next few days, within the next hour, within the next month. Just depends on what type of contract you're buying. But I think a lot of people don't think about that when they're making their buys. And then you add in the time decay aspect of it. It's like, okay, if I think that this price is going to go up in a couple of days and it doesn't, and I'm still holding it, it's like I'm being penalized because of the time decay. So there's a lot of things that a lot of people don't think about. And I think with crypto, it even with just leverage, you're you're getting that volatility and you're getting the gains, like those percent, those, I'm sure you remember back in the day when people would be posting 100% gains on option contracts, and really it's like, this contract only went up like 20 cents.
Yeah.
But because it was 20
Yeah.
cents, like it's 100% gainer. And we had the direction right and everything was working out great. And again, when you are in crypto and you're using 40x leverage, like you don't need a big move to see 100% win. It's kind of eye-opening.
Yeah, I mean, I agree. I think there's a lot that goes on within the options world that can be relatable to crypto in a way. Options is, when you boil it down, especially if you're doing like naked puts or naked calls, I mean, it's very similar to trading leverage in a way. On the crypto side, you can have a very small move in a stock price that could be a large move percentage-wise in a gain or a loss when you're trading option contracts. So, but the challenge with options, again, like you said, is, you have to get the direction, especially if you're trading like a naked put or a naked call, you have to get the direction correct, but then you also have to get the time correct, because there's a thing called theta, which is one of the Greeks that are within options, and essentially that is time decay. And the longer that you hold the option contract, the more the contract price decays because of theta. So it adds another wrinkle into trading. It's not as simple as a stock price of like, hey, this is going to go up, I'm going to buy, I'm going to long it, with you could long something and maybe you might be up 1 or 2% over, a 2 or 3 week time frame. But if you were to buy a naked call option on that same trade over that same amount of time, even if it did go up 1 or 2%, you could be losing money because of theta and because of the time decay, because you're holding it so long. So, there's definitely intricacies to options trading. I'm looking forward to, I want to share more information about this. I think it's something that there's ways to de-risk options through, different types of option strategies. You could do vertical spreads, you can do strangles, you can do iron condors, straddles, things like that. There's different types of option trades that you can open up that aren't just a naked call and a naked put, that will expose you less to your percent gain or percent loss and can de-risk your trade opportunities a little bit. Credit spreads are another one, similar to vertical spreads, kind of the same thing. And I think that those things are opportunities where you can take advantage of the market and market conditions, whether it's market volatility or market movement, things like that, where you can take advantage of that and make money. And obviously, as always, me and you are always trying to find ways to make other people money. So, if we're able to share some content that can help people learn options a little bit and then find and share strategies that can do the same thing, then it's kind of a win for everybody. So that's another reason why I'm interested in kind of diving back into the option world, because I think there's an opportunity to teach, and I think there's an opportunity for us to teach people ways to make money in a semi-safe manner, which maybe a lot of people aren't necessarily familiar with from the option standpoint.
Yeah, absolutely. Especially when you get into selling options, holding, like, if I'm a holder of Microsoft, for life, for example, and I have over 100 shares, I can take advantage of, almost like creating my own dividend through selling.
Yeah, covered calls, covered puts.
Yeah. And I think also, I know we're producing content right now on, understanding vertical spreads, condors, butterflies, things like that. But there's a lot of perks to knowing this when you're, especially trading a small account. Like, for example, you can get out, you can avoid a pattern day trade hit by opening a vertical spread. And like, how many people really know that?
Slim amount of people.
Super
Yeah.
slim.
I don't think a lot of people really realize that. And I don't think a lot of people understand how that actually works. So, it can be extremely beneficial to you. I'm in that process right now where, I'm trading with a small amount of money. I put $1,000 into Robinhood, at this moment of recording, I'm up 20-some%. Hopefully, when this episode releases, I'm up more than that. We'll see where things lie in a couple of weeks. But, I'm in a situation where my first 3 trades, they were all day trades. They were, I think I had 2 calls and 1 put over 2 days or 3 days. And so I maxed out my day trade. So I had no more day trades left. And my only option was if I wanted to continue trade options and lock in trades and profits on those trades, I really had to open up a vertical spread at the point in time where I was at, once I became in profit to a level where it either hit my take profit level or I was comfortable with the returns I've gotten, then I would open up a vertical spread to essentially lock in those profits. And, hopefully I'll be able to share a video on that goes into detail a little bit later. But essentially, if I open if I'm in a put on a specific asset and the price has gone down and I've gotten to a point, let's say I'm up, 10, 12, 15% or something like that. And I'm like, you know what? I'm happy with these returns. You can sell a put at a slightly different strike price, usually below the original put strike price that you have. And then essentially what's happening is when you bought a put, so your thought is, okay, as price goes down, I'm going to make more money on this put. And then when you sell a put, it does the opposite essentially. So it increases in value as the price goes up. So if you buy a put and then you're in profit and then you open up a sell put, you've essentially opened up a bear put spread. And what that's doing essentially is locking in those profits to where essentially, if prices start to go up, you're going to lose money on the initial buy put that you executed earlier in the day, but you're going to gain money on the sell put that you opened up later in the day. So essentially, if price goes up, you're going to lose money on one side of the put. On one side of the option, you're going to gain money on the other side of the option. On the vice versa of that, if the price continues to go down, you're going to continue to make money on the initial position that you opened, but you're going to lose money on the secondary position that you opened. So more or less, I mean, you could lose a little bit of money or gain a little bit of money, but more or less, you're essentially locking in those profits, and then you're able to sell that the next day. You're able to sell both of those positions the next day, and then you've avoided a day trade, but still locked in the profit that you had from the previous day. So that's a very baseline version of it. We'll hopefully, share a little bit more details on how to execute those in real time via YouTube in the future. But yeah, I think that's a really great method to utilize, and I think it's something that, in my opinion, I assume a ton of option traders don't even know that that's an option for them to
Absolutely.
do, especially if someone's opening a naked call or a naked put and they're just kind of trading it and they're like, man, I'm out of day trades, and then they're just like, well, I guess I'll just cross my fingers and hope this hits tomorrow. Instead, they could be opening a bear put spread or a bull call spread, whatever it may be, depending on the position type that they're in, and be able to lock that in to where when they roll over to the next day, they have the ability to exit those trades and know that they're going to be in profit. So stuff like that I think is, information that isn't necessarily easily readily available to people that we can share to people and, help them de-risk themselves a little bit and make money in the opportunities that present themselves in the stock market.
Yeah, absolutely. I mean, you kind of touched a little bit about crypto options, and, that is where it really interests me is that, we have been in this crypto world for a bit, and I am a little bit out of sync with traditional finance in terms of the stock market. I am not actively trading the stock market. I do have a portfolio in my 401k that is more or less long term,
Same.
but I'm not in there like Ethereum or, Atom has been big for us, but I'm not trading these. And when I'm not trading them, I'm not familiar with their price action. So yeah, I got sticker shock as well when I went to go look at some of these prices of, especially like Home Depot and
Yeah.
these option contracts that we were constantly trading in this zone, in this range. And, of course they've blown way past that. And, since the 2016 days, and it's wild to see, everything that has happened with the market. And it kind of leads into our next segment talking about 401ks a little bit, but, most of the market is driven by retirement funds. It's driven by the fact that, in the 80s or late 80s rather, when 401ks were introduced, barely any companies offered this to their employees. Most people had pensions or nothing at all. It was like, okay, you want a retirement, you got to save yourself for retirement. And eventually people were like, hey, I'm not going to use my pension. Companies realize like we can get tax breaks for offering 401ks, and the tech industry though really pushed it to the next level by matching. Like, we are going to match up to 5-6%, and it kind of set the bar during this last growth period where tech companies, hired so many people, and so many people were trading 401ks. And when I say trading, but like they were putting money, investing in their 401ks, which basically every week, because we're all paid on a biweekly schedule for the most part. If you're in an S&P 500 company, you get paid biweekly, and so thus every single week, money is getting dumped into the market. And the reason, in my opinion, why we have seen such an insane growth since 2016 and up is we saw a bear market really up until 2009, right? We had the crash, and then we had this whole millennial workforce come into the workforce, rather, and we've always been accustomed to 401ks. We never knew a world of pensions. We never had anything less than that. We've always been told, like, invest in your future long term, and our only option was 401k. And as more and more people invest in a 401k, more and more money is dumped into the market. Thus, I think this is one of the big driving factors of why the price of certain stocks have gone up so much, is because it's backed by 401ks.
Yeah, I mean, I think this was a really thought-provoking thing that you brought up. I don't even know, probably a month or two ago to me, that I didn't even really think about when we were talking about bear markets and bull markets and things like that. And you were like, are we really going to see like crazy recessions or crazy bear markets ever in the future again? Because essentially every week there's more and more people investing in 401ks and investing in their employee stock programs and things like that, that is just infusing money into the market constantly. Every single week, money is getting infused into the market. And if that's happening so much and at such a high volume level, then it's like, how do we have major like drawdowns in the market? And I'm like, kind of got a good point. It's like, I mean, if 401ks and Roth IRAs and things like that get, consistently more widely adopted, it's like that's just more and more money that gets infused in the market as buys, which then is like, okay, what is a factor that's going to be larger than all that money together that's going to cause the market to go down? And I'm like, I don't really know. So it's an interesting thought to bring up, to think like, okay, over the past 10, 12 years, there's more people that are trading in their 401k or investing in their 401ks than there ever has been before, which means more money is flowing into the markets than there ever was before. So you kind of have to reset that mindset a little bit of like the cyclical, bear and bull cycles and all that kind of stuff. It kind of gets flipped on its head a little bit because there's so much more money that's getting infused into the markets than ever before. So that changes the outlook of what the markets are over the next 5, 10, 15, 20 years. So it's kind of an interesting thought to think like, are we really going to have a traditional bear cycle, a traditional recession cycle, 2008 and 2000.com bubble and stuff like that? Are we going to even ever see that kind of stuff again? Because of the amount of money that's flowing into the markets now is so much larger than what it ever was in the past. Are we ever going to see that same activity again?
Yeah, that's a good question. I mean, I don't know how accurate these numbers are, but I read these figures that in the year 2000, only about 12% of employees were investing in a 401k. And in 2015, it was close to 40%. And then in 2022, we were close to 60%. And it's like, holy shit. Yes, it has been 22 years. 2000 doesn't seem that far off for me. Like, I mean, it kind of seems like yesterday, but essentially in 22 years, we have taken roughly, we've gone from 12% to potentially 60% of the U.S. working force putting money into the markets. that's pretty astounding. Like, I mean, it does make it very difficult for the markets to have such a heavy recession because there's constantly money coming in. And, before recessions were driven by certain events, 2008, it was the housing market crash. In the 90s, it was the dot-com bubble. In the 80s, I don't even exactly know what it was in the 80s. I mean, I think it was an algorithm problem on that Black Monday.
Oh, 87. I think it was
something
87,
like that.
1987 that happened.
And then there was like Japan's market crashing and all that. But then things were different back then when trading in the 80s versus trading now, wildly different.
You couldn't even really execute trades on computers or anything like that in the 80s. So.
Yeah, you had to physically call your broker, who then probably had an insane spread.
Massive. Yeah, the bid ask on that has got to be insane.
My God.
Yeah.
My God. I don't even want to know what that was like. But yeah, the things have changed so much. And now the question that I have is like, okay, so for the longest time is, 401ks have been touted as like, look, the overall performance of the S&P 500 is roughly around 7 to 12%. On average, going back many, 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 many moons, and your 401k performs similar if you just put it into the market. Rather, you can diverge that into safer funds, bonds, whatever. But if you just have it in the market, 7 to 12%, are we going to continue to see 7 to 12% consistently, knowing that all the smart people that are managing money, they obviously know what I know, right? Like, more money's coming.
Yeah.
So at what point do these returns diminish? Because how can the economy, how can it just last knowing that?
I mean, if more people are funneling money into it, then theoretically it would just continue to go up and your returns will be even higher. But I mean, the other thing I think you have to factor in is like, this kind of goes back to like 2015, 2016. I think we touched on this maybe last episode, the previous episode, but the fact that it's easier than ever to invest now. I mean,
it is.
You can invest on your phone, and even if you don't have a 401k with your company, you can open up a Roth IRA or any kind of retirement account through any of these platforms with 3 or 4 clicks of a button. I mean, I can look right now on Robinhood, but I'm pretty sure they match like 1% if you open up a Roth IRA with them, which is newer to Robinhood. I know this pops up on my account every once in a while. I'll see if it pops up right now.
That's pretty impressive.
Yeah, I'm like, it's not popping up on my Robinhood account now, but it'll usually pop up in the little cards that it shows and be like, open up a Roth IRA today and we'll match 1% or something along those lines. I don't know if that's 100% accurate, but that's what I've seen in the past. And I'm like, man, that's crazy for you to be able to just open up a retirement account on any platform without, necessarily it being, tied into your job, and you're still able to get some level of a match through the platform that you're using. So, and then even if you don't get a match, you're still able to open up IRA accounts. I mean, there's maybe not hundreds, but there's tons and tons of brokerages out there where you can open up a Roth IRA account and you can start investing your money into that account. And that's just even more money that gets infused in the market. And when more money gets infused in the market, generally prices go up. So I kind of wonder if the 7 to 12%, maybe in the future, maybe it's 9 to 15%, in the future. And we look at some of these evaluations for these companies that are out there, and some of the bigger tech companies are at $2-3 trillion, and we're like, how does this keep going up? But I'm like, I mean, people are just going to be shoveling money into them on a weekly basis from their paychecks. It's bound to just keep going up.
Yeah, because when you're investing in the S&P 500 and like you look at tech and it's about 10% of the S&P 500, that means that if you evenly distribute your money if you just put it in an index fund, for example, an S&P, then 10% of that is going into tech. Now here's the real kicker. If you invest your 401k and you manage it manually, like if you're picking like Vanguard Admiral funds or whatever, you might find that, these, like for example, Admiral Fund's going to have a lot of Microsoft because it's a tech fund, I believe. Yeah. So if you're investing your 401k into the standard markets and another fund that is focused heavily on one sector, you're going to be double dipping into tech. And so these companies like Microsoft, Facebook, Apple, all just basically FANG in general, they're going to see a natural boost because of that. But I think one of the things that a lot of people don't really think about with 401ks is that you save money on your taxes.
Massively.
It lowers your taxable income. If you invest 20% of your money into a 401k, which I don't know if there's a limit
Most is
to
18. I'm pretty sure
Yeah, it's
18 is the max.
18% or 18,000?
18%.
I think it's
I think it's
18,000.
18,000. You might be right.
I think you can have 18,000 in your 401k and 18,000 in a Roth.
Yeah, that sounds right.
But if let's just say you're making $100,000 and you're taking 18% of your money right off the top, and you're basically saying, hey, I can't get taxed on this. This is lowering your taxable income. This is great for you. And not a lot of people know that this immediately helps you out come April when you're filling out your taxes. On top of that, yes, you could open up a Roth and you can now take it from 18 to potentially 30% of your income. I mean, depends on what you make or whatever, but just using this example, is now you're not getting taxed the same amount as you would be if you weren't investing, and you're protecting yourself for the future, which is pretty fucking cool. And there's also 503Bs, which is like 401ks for your kids. There's a lot of ways that people can invest their money. This is how the rich get richer.
100%.
It's because all of these policies, procedures, and things that are created are all designed for them, not for us little plebs, right? And if we're not taking advantage of their system, it's going to be hard for you to get out of the everyday grind, paycheck to paycheck. This is why most of America lives paycheck to paycheck. When I talk to people and I'm like, especially people that we work with, and it's like, hey, are you invested in 401k? No, I don't really believe in that. It's like
free money. They're the one. It's like the one like free money hack that most people are gonna have, and they don't take it.
It blows my mind when someone's just like, yeah, I don't trust it. And it's like, dude, you don't fucking know shit.
I mean, you got to think about from what you were saying about the taxable income thing. Like, let's go with the example. If you make $100K, if you now put $18,000 in for 1 year, now you're sitting at your salary of $82K essentially that you're going to get taxed on. So you're now getting taxed on $82K instead of $100K. Secondly, if that $18K, is making, good money in your account, even if it makes 10% in a year, you've now turned that $18K into basically 20 grand. And then you got to think about compounding that year over year. And if you're doing that in your mid 20s, early 30s or something, mid 30s, something like that, and you're running that to 65 years old and you're doing that year over year, dude, you're going to be freaking loaded by the time you get to, you might even be able to retire in your 50s because you're already loaded because you've stacked yourself so nicely, over this time, and you've saved money on your taxes and you've made money in the markets. So, it's kind of a win. It's a win all the way around. And then, kind of like you said, for the people that just aren't investing in it or aren't taking advantage of those opportunities, it's just like, man, you're setting yourself up for a bad situation. I was reading online the other day that like the boomer generation and some of these other generations are trying to, retire off like, most of them, some of them have retirement of like 100 to 250 grand. And I'm like, you're screwed. You're about to be a Walmart greeter at like 75 years old.
Yeah, it's unfortunate. I mean, I think it definitely... it sets everybody up for failure if you're not investing in your future. But it also, it kind of hurts everybody else who is taking the right path, because ultimately some form or fashion we're getting taxed to pay for these people, whether that's through like, local government taxes or, federal taxes, whatever. There's some programs out there that we're going to have to pay for people who didn't prepare for themselves. And even for those individuals, it's not like, if I give $100 a year to taxes, this person's not getting $100. They're getting a fraction of a cent. Yep. And so they're not even getting good money for thinking that, I'm going to take advantage of the system. So I think what 401ks have really opened the door for people to think long term. But yeah, I mean, overall, there is a lot of inconsistencies with it. I mean, in my opinion, man, most people are uneducated with it because they just don't understand that they don't understand
Yeah.
stocks and they don't understand investing.
I mean, I think people are way more educated in the past like 5 to 7 years than they ever
Oh
were.
yeah.
But it's still undereducated.
Yeah, I mean, I think if you ask people to like, hey, pick your favorite companies to invest in, I probably would not want to hear what people are picking as their favorite companies. This can be sad, and then especially with the boomer generation, a lot of them had pensions, and a lot of these companies recognize that if I can this person before 20 years, I don't have to pay a certain type of pension long term. So a lot of people were getting fired 15 to 20 years in, and they got no fucking benefits after that. And that shit sucks. And really, we could go on a huge tangent, but there's health savings accounts like that lowers your taxable
I almost
income.
brought that up, but I want to go off like major off topic.
I'm also a huge fan of if you are managing your 401k and your 401k is doing well, I'm a huge fan of 401k loans because now it depends on what it is. If you're just like, oh, I want to put some landscaping in, it's like, no, fuck that. Don't take a loan. But if you're like, I want to take a risk and I want to create a business, it's like, okay, you're taking a loan from yourself. You're going to pay interest right off the top of that, but you're paying that interest
To yourself.
100% to yourself. The only downside is you have to pay a fee, but it's like $100, $200.
Yeah, it's super cheap, 50 to like $200.
It's way cheaper than if you were to go get a loan and pay actual interest. And if you have an actual idea and you believe in yourself and you believe so hard that you're like, I'm going to go to the bank and get a loan, but you have a 401k, look into your 401k loans. Yes, that money is not going to compound while you're paying it back. But if you believe in your business and your business is successful, hopefully it makes far more money than what your compounding would have done.
Yeah.
So I am a huge fan of that. Not a lot of people know that they can take a 401k loan out. And the people who do know, when I talk to them about it, they're like, oh my God, that's the worst thing in the world. And it's like, I think they think it's like, oh, I'm going to take a 401k loan out and buy an 80-inch TV. This is what I want.
Yeah.
It's like, no, you use it as an investment. Like I know people who have real estate in their 401k. Some 401k plans allow you to buy real estate properties. I've known some people that have taken loans out to buy properties. That is a whole nother subject because taxes is different. If you take a 401k loan out and you buy a rental property, you're losing out on a lot of tax breaks that you would if you hadn't bought that with your retirement fund. But needless to say, you could do that, or you could buy into a business or whatever and still treat it like an investment. And maybe your money is not in the market per se, but it's in all these other little companies.
Yeah, you still have the potential of making money off of that money, maybe just through a different avenue.
Yeah. And that's the beauty of a 401k. It gives, I mean, I will say just based off of the research, it was definitely company, like really the tech industry that gave people the freedom to choose with their 401k, which is both good and bad. If you are very uneducated, you might make some terrible choices because the number one failure is the fees. A lot of people look at the returns, and I always go to Vanguard Admiral because it is a high return fund, but it's like 2% fees.
Yeah, that adds
which
up
is
quick.
That is super high.
Extremely
so high. When you think of 2%, it's like, it's like, I'm just paying $2,000 on $100,000 managed. It's like, yeah, but here's the thing. They take fees off of every trade. They take fees off of your, yearly fee. I mean, there's so many fees. They're getting paid. At the end of the day, a lot of times people aren't getting paid.
Yeah, what's also interesting about this, I'll go a little bit off topic, but it's still kind of in the 401k realm, is like, I've been looking a lot at like the average, from a millennial standpoint, boomer standpoint, Generation X, all that stuff, what is the average amount of money that people have in their savings account at a specific age, and then what is the amount that they have saved in retirement at a specific age? And it's crazy to kind of see, because the boomer generation generally have way more money in their savings account, but they really have no fallback on their retirement. And then like millennials and Generation X and stuff, they have the opposite, or Generation Z or whatever it is. It's the opposite situation. It's basically like they have like no money in savings. Like on average, somebody that's in their like 30s is averaging like $3,000 in their savings account as a younger generation, but they might have 50-60 grand saved up in their 401k, whereas someone that's a boomer that's 60 years old might have about the same amount in their 401k and they're 30 years older, but they got 100, 200K banked in their savings. So it's interesting to see how the generations, have gone, and kind of goes back to your point of like back in the day, on average, people had about a 12% investment in their 401k, and now it's 60%, which it's interesting. It's kind of like, well, which one is better? Because the boomer generation may have more readily access to that money. Whereas, because maybe they're in their 50s and their 401k is locked up till they're 60, but they got a nice bankroll in their savings account. Whereas the millennial generation may only have a few $1,000s in their savings account, but they're banked, for their 401k when they retire. So it's an interesting predicament to talk about and see like what is the better route to, have all your money locked up in your savings account, over a long time and have access to it, or dump that money into your 401k and be able to retire, or potentially retire early because you got a lot of money there.
Yeah, I don't think it's much of a discussion. I mean, two things. One, boomers' parents are the generation that either A, depends on how old they are, they went through the Great Depression, or they are the product of parents of the Great Depression.
Yeah, the aftermath.
And the world wars and all of that. And so when you think about that generation, they hoarded everything. They scraped the sides of the peanut butter jar, right?
Yeah.
No waste. It's because they went through a situation of absolute turmoil, and they realized that at any point in time, this could happen. Because the people who truly were like, imagine right now, like if we go back 100 years, we're in the roaring 20s. We have the most successful time that America has ever seen, and then it is followed by one of the worst times that America's ever seen. And it happened so quickly within a decade. So you could be living it up and then potentially be homeless on the streets, a decade later. And so they probably kept that with them, and then that was passed on to their children, and so forth and so on. So that's why boomers, and plus they had no access to 401ks. They only had access to pensions and things and even pensions, it's like, it was career, opportunity. Like McDonald's was not offering pensions.
Definitely not. It was big corporations.
Yeah. And I mean, Starbucks was one of the very first companies to ever offer a 401k to part-time employees. Like, you work part-time, you get 401k benefits. And it's like, whoa. And the first off, it was Starbucks of all companies. Yeah. That could be equated to like a McDonald's job. It's like, it's a drive-through, it's an hourly wage, you're getting minimum wage, but you got access to 401k. So I think a lot of boomers didn't have access to that. I think they grew up with Great Depression parents. And so naturally, they're going to hold more cash than they are going to have invested. Terrible idea. Just look at the last few years when inflation has gone up. Cash is not good unless you have shitloads of cash. If you've got $200 billion of cash, we can see what can be done with that, as certain companies have done things with it. If you're holding $2,000 of cash, because of inflation, your $2,000 is no longer worth $2,000.
Definitely not. Not even close.
And it holds no power at all. So whereas like during this time of COVID and everything, the markets have ripped. 401ks are straight up printing. This is the most successful time for 401ks ever. If you're holding cash, you're getting fucked.
Yeah, I mean, if you had $100,000, March of, what was it, 2020 or 2021, whenever COVID happened, and you had $100,000 and you put that into a 401k, or if you just held it in your bank account, I mean, my God, man, that $100,000 in a 401k at minimum is probably up 100%, $200,000. And that $100,000 that you had in cash, probably worth like 75 to 80K. It's not, you're losing money on that 100K by just holding it over the past 3 years or so, and you're almost doubling it probably in most stock market conditions.
Yeah, sadly, that is absolutely true. And
I think, I don't remember exactly. I'd have to pull up the chart, but I'm pretty sure SPY went to like low 200s. Low to mid 200s, and we're in the mid 400s now. So that's the market at the S&P 500 alone has close to or more than doubled. And I know me and you, man, we freaking loaded up on oil stocks, travel stocks, airline stocks, and we freaking banked. I did not think we were gonna bank that fast. It was probably, how long were we in some of those trades? Maybe 3 months from like the peak COVID point to the point where everything literally, it was like a V in the market. I remember I bought Delta, and I think I bought this thing at like $20, and this thing was like $60. Like, I feel like it was like 3 months later, and I was like, dude, I just made 200% on this thing. Carnival Cruise Lines was another one. I think I bought that sub $10.
Yeah.
It was crazy time. So
to me, it seems so obvious because in my mind, as we're sitting in lockdown, and granted, we did buy a little bit early, but as we're sitting in lockdown, I'm thinking, okay, wait a second. All of these travel stocks have taken a hit, obviously, right? We're in a lockdown. No one's going to be going traveling, but what's going to happen when the lockdown is lifted? People are going to be like, I got to get the fuck out of my house.
They're going to be, I got to get the hell out of here.
Yeah. Me include, like, I took my family to freaking Disney World.
Same thing. I went to the Universal.
The summer of 2021. And it's like, yes, it was basically paid through Carnival Cruise Lines. I made fucking bank off of that shit. And I told everybody. I told anybody I could talk to about my reasoning for it. And I had a few friends that were very much like, yeah, this makes total sense, and did the same thing. But like airlines and travel stocks in general definitely kept me in my 401k looking pretty nice. But yeah, I don't think a lot of that, it brings the question of like, how can the market sustain this though? Like, it's for, like, we had pensions. First of all, we had nothing. Then they created pensions, and they created pensions, and the idea of like, we got to protect our old people. Like,
yeah.
Old people are going to get to be a certain age, and they're not going to be able to fucking work, and we're going to have to take care of their asses. So we got to set them up, hopefully for responsible ones to at least take care of themselves, and the irresponsible ones will create all these programs for, and we'll be able to take care of them. But it's like, going forward, if everybody's using a 401k, can that be sustainable?
It has been for the last several years for sure. And I think, obviously, I think most of the companies, especially the S&P 500 companies, are going to benefit highly from all these people and just consistently infusing money into their 401ks. And I think the more people that adopt 401ks, the more we're going to see the market pump. And even on, bad news, you got to think, like, dude, if you go look at the, macroeconomics of the U.S. right now, terrible. Oh my God, man, it's shit city, dude. Everything is garbage. Like, the money, they're bleeding money. They're massively in debt. The interest, the amount of interest that they're in debt is an insane amount that can't even be paid back. If you look at all this stuff, you're like, the U.S. is not even going to exist at some point in time, because there's no way they can even fund all this shit. But, somehow the markets just keep chugging along, going up, because all these people are just like, I think it's just, it's also kind of peer pressure. One person says, hey man, I'm invested in my 401k and I'm making bank on this thing over the past 3 years. And then you got apps that you can use and you can look at it. You got screenshots people are sharing. You got access to social media where people are getting content and information and news instantly. And it's like, I just think more people are just going to be funneling and shoveling money into the stock markets, and which is good for the markets, and I don't necessarily see an end in sight at the moment.
Yeah. Yeah, I mean, I wonder like if a company were to have a massive failure, like let's just say something crazy happened to Amazon. I mean, I honestly don't know what it would like. It would probably fucking take Jeff Bezos becoming Hitler 2.0 for something insane to happen. But let's just say, let's play this out. If Amazon went to crap city, 24 hours from now, what is that going to do to people's 401ks? Like, because everybody is like if you have a 401k, you're invested in Amazon.
100%, yeah.
Like you're invested in probably the top 500 companies on average. So if one of those companies that is a top 10, top 5 do something outrageous and there's an adverse reaction to it, or maybe the sector fails as a whole, like for instance, if we have a tech bubble burst, which people have been calling for a long time.
Forever.
I mean, my God, man, it's probably 20% of the market, probably more, to be completely honest, is tied to tech. And if the tech had a bubble burst, that would demolish everybody's 401k.
Yeah, but you got to think also, like, if those companies did go, they had a massive drawdown, everybody's still going to keep they're just going to buy it back up. Their 401ks are going to buy it back up. And so it's like, how long is it actually going to, like, is it going to actually be sustainable? Like, if, Microsoft dropped 50%, people are just going to buy back up over time and it's going to go back up. And it's like, and then also the people that are in their 401k, they're basically buying, Microsoft at a 50% discount from where it previously was. And so then they're averaging themselves lower, which means if it does go back up and it reaches all-time highs, everybody's that much more richer. So it's an interesting like debate on where that falls in the long run. But it's like, I mean, if people keep investing in their 401ks, I don't really see a situation where we're gonna see some like massive drawdown in the market because everybody's just gonna buy it back up.
I guess, yeah. I mean, I do see that. It just seems too easy.
It does, yeah, and it's too simplistic.
It is. I know that you and I have been very vocal about trading 401ks. I know that a lot of people, when they've heard me say, "Oh yeah, I day traded my 401k," wait, what? Like, yeah, I was buying penny stocks. Like, that's so irresponsible. Yeah. And I think that type of reaction to me is like, no, that's irresponsible, that you don't know the limits of your 401k. Like, you don't know that you can create a brokerage account and trade it. Like, obviously, I'm not out here willy-nilly in this. Like, I'm putting informed decisions into my trades. Like, and obviously, I'm not hitting on every single one, but I'm playing statistics. If I stick to a strategy, and it just amazes me that people aren't doing that. And, the brokerage doesn't necessarily have to be for trading. What I think the most valuable asset of the brokerage is it allows you to buy into long-term bets. Like, if I'm a strong believer in Microsoft only, and I'm like, you know what? I want to put half my wealth into Microsoft. A 401k account theoretically should allow you to do that. It's dangerous and probably idiotic to do that, but
it could pay off in the long run. I mean, especially if you do that over the last few years, you're outperforming your 401k normally, your Vanguard fund or whatever fund you're putting your money in. So, I mean, I think it's a really cool opportunity. I mean, I think if you know what you're doing, you can make a lot of money. If you don't know what you're doing, you could blow up your 401k. So, it's a little bit of a, risk reward there on what you want to do. I mean, we did trade penny stocks, but we knew what we were doing. I know, one of them that I can actually remember was, I don't know if you remember BIOC, BIOC.
Oh man, that was time in that shit was perfect.
Dude, we were killing it on that freaking. I don't know, it was like some pharmaceutical company or something like that, and this thing would go. Dude, this thing would clear like 20% returns in like a day every once in a while, and we were trading some pretty decent money from our 401k in that, which obviously could be risky, but for the most part, we both killed it in our 401k. We didn't even throw, we threw very small fractional amounts in our 401k and built that up to pretty big money, trading it through brokerage accounts. So, but if you don't know what you're doing, I mean, obviously don't don't freaking do that. But you could, like you said, man, if you're gung ho about certain companies, and maybe you're like, you know what, I like having my money in this Vanguard fund, or this certain fund that is pretty safe. Maybe it has a lot of bonds in it or something like that, and you're like, you know what, I want to take 10% of my 401k and I want to invest it in 3 specific companies that I think are going to pop off in the next 10 years or something like that. You should have the ability to do that and open a brokerage account and put that money in those buy shares of those companies and kind of let it ride and see where the chips fall down the road.
Yeah. I mean, I made a colossal mistake, which at the time I thought it was going to be great. But, when the Biden administration was running, they talked about how, they believed that cannabis should be, recreationally legalized. And that's sort of the platform that they were running on. And it kind of seemed like a few other candidates were talking about it the same way. So I thought, in my genius mind, I am going to take, a percentage of my 401k. I'm going to buy up. I basically took 10% of my 401k and I bought up cannabis stocks. And well, obviously none of that ever fucking happened. And those stocks ate big bags of dicks. Yeah. And it's kind of sucks, but at the same time, it was like, it's cool that I had the opportunity to do that. Not a lot of people will have the opportunity to create brokerage accounts with their 401ks. It just depends on their company. But I was able to invest into cannabis when I couldn't do that through traditional markets. And I see the same thing happening with this BlackRock ETF fund with crypto. It's like, there's not going to be Vanguard crypto funds right now.
Not yet.
Maybe later, but right now you can't do that. If you can invest into BlackRock's, you're going to need a brokerage account for that. I don't think your traditional 401k is going to allow for that. It's too volatile. Yeah. Too risky. And the idea between a 401k is if you're not managing yourself, then it's safety first. It's always going to be the most safe, least amount of returns possible. The goal really is to be, if it makes you $1, it's a success. Yeah. And you can amp that up through many different ways and doing all kinds of crazy stuff. But at the end of the day, as long as your money is earning additional income, then it is a savings for your future. So it's going to be interesting to see what happens. But yeah, I mean, it definitely feels like a lot of people just kind of have a lot of money. And dude, you and I have talked about this countless times. Where the fuck is all this money coming from?
This is a topic that I can't even wrap my goddamn brain around. Is like, dude, everybody's rich now. I'm like, dude, I'm like, okay, what happened in the past, 24 months, the last, 2 years or so? All of a sudden, everybody I know or anybody I don't know is just, buy whatever they want, spend whatever they want. I'm like, dude, when did everybody get rich? I don't know what the hell happened. I don't know if everybody took their, $1,000 freaking stimulus check from a few years ago, put it in a casino in Vegas, and won $100 million, and how everybody's walking around with bags that they're just rich, or if everybody's just going massively in debt. I think that's what's happening. In my opinion, I just assume people are just you know what, screw it, because I know the credit card debt, U.S. credit card debt is at the highest point that's ever been in history. But
I believe it.
Yeah, I don't know what the hell happened, man. The last couple of years, I feel like everybody I know and everybody that I don't know is freaking rich as shit. We were literally just talking about this the other day about the Super Bowl last year. I was trying to go, but for me and my wife to go, it was, well over $10,000 just for the tickets. Then you add in a $2,000, $3,000, $4,000 for hotels and transportation and airfare and all this other stuff. And you're looking at minimum $20,000 for 2 people to go for a 2-day or 3-day weekend and go to one Super Bowl game. And then I watch the Super Bowl on TV and I'm seeing families of 4 and their kids waving in the freaking cameras and shit. I'm like, that's a $25,000 vacation minimum for those 4 people. Minimum. Yeah. Most of these people are probably paying $30,000 plus to go to this game. And I'm like, when did everybody get rich and why am I not a part of it?
I mean, in the last probably 3 or 4 months, 3 of my neighbors have bought brand new Teslas, and I look around and I'm like, this is odd. I mean, we're in Austin and things are different. I see Teslas everywhere. They're not cheap. I mean, your fucking ass drives a Tesla, but
70 grand.
yeah, I mean, they're like, I see more Teslas than any other car. And I don't know. I'm like, in my mind, I'm like, okay, what has happened? Where are the Kias at? Like, where are these cheap $10,000 cars? No one has that anymore. Everybody has big screen TVs. Everybody has everything, man. It's so crazy. When we went to I don't know, we were at the Domain or something, but we looked around. And you were saying like, dude, everybody has
a MacBook.
That's expensive.
Yeah, I mean, even when we were driving through the parking lot of the Domain, I'm like, there's no shitty cars here.
Yeah.
I'm like, everybody has a nice car. Everybody has a nice house. Everybody has the latest electronics. Everybody has the latest iPhones, the latest MacBooks, the most expensive, tech equipment. And I'm like, what is happening right now? I don't get it.
I don't get it either, man. It's strange. A part of me wonders, like, well, okay, you mentioned the stimulus, but like, could that possibly? How would that have done this?
No, there's no way. Because I mean, I don't even remember how many. What we get, 2 or 3 checks? It was like $3,000 total or something like that for the. I think that was like at the max too, because I think the max you could get was like $1,200 or something like that, at like based off your salary or whatever. And then I think there was 3. I'm pretty sure there was 3. So I'm like, most people are getting like $3,000. I'm like, that is not enough to fund most of this shit. I will say businesses, dude, a lot of these businesses got bailed the hell out, man. They like, if you had a business, you were getting like massive chunks of, massive checks and massive chunks of money, and potentially, not having to pay it back at all. It was basically like a free grant, more or less. But the average person, I'm just like, I mean, most of these people didn't have freaking their own business at the time. So, the average person, I'm like, I don't understand it. But like I said, the last like 3 years, it's like everybody's got money. Everybody's got the latest products, the latest cars, the latest houses, latest, technology equipment. And I'm like, where the hell did this come from?
I think this is kind of what propped up the market in crypto as well. Is like people had excess cash to be like, oh, where should I put this? My 401k is already investing in the market. I'm going to put it into this crazy asset over here that may or may not make me money. And then, they see the 1% that does make money and they're like, fuck, I could make overnight money. And thus all that extra money got dumped into crypto.
Yeah, but I don't think the majority of these people that were like, where is this money coming from? I highly doubt that they just like made bank on stock or crypto and then,
That's true.
cash it out, and then they're like, oh shit, I'm rich. Like, I don't think most of these people aren't that smart. Like, I'd probably say 90% of these people did not go that route. So I'm like, where the hell did 90% of these people all of a sudden get money? I'm like, or are they just over here like, you know what? I'm just going to go massively in debt and see what the fuck happens in the future.
I think it's that. I specifically know one person in particular who they're putting a pool in, and I'm just like, I know what a pool costs.
$100,000 around here for like a base ass pool.
Weak ass pool. And that was like 3-4 years ago. I mean, my wife wants a goddamn pool. We have quoted that shit out, and I've been like, no, fuck that shit. But I've seen people putting a pool in, and I'm like, I know what you make because you've told me. How is this possible? I know I can't afford a pool. How the fuck are you affording a pool? It's like nobody should be able to afford a pool. The only way you can afford a pool is if you buy a house that has a pool.
Yeah, pretty much.
It's too goddamn expensive.
Yeah, you're definitely not getting a return on that thing. I mean, your house value might go up 20, 25,000, but you're probably spending 100, 125, 150 minimum, at least around here in Texas, to put it in.
Dude, we quoted out a pool in, I don't know if it was like 2020 or 2021, and it was like about 115, 120.
That sounds about right.
I got to assume, even if let's just say it's 120 right now, when you go and buy a $400,000 home that has a pool, like, that's not that much more than 120.
Yeah.
You're getting a whole house.
Yeah, that's true. Yeah.
Property, land, an asset, plus a goddamn pool. It is amazing to me how much a pool devalues your house from the person who put the pool in, but how much value it adds to the person buying the house, because they know I don't have to pay for this pool.
Yeah.
The house almost costs the same amount whether it has a pool or not.
Yeah, I mean, depending on where you look, it can be pretty freaking close.
I mean, it also depends on the pool. Like if it's a very, very nice pool and it's got all these added on things, it's probably going to add value. But for the most part, if you buy a $100,000 pool, it's not increasing your house $100,000.
Definitely not. Not even close.
Probably not even 50.
No, it's like 25.
If that. Sometimes people are like, man, I don't want this house to got a pool.
Yeah, they don't. Yeah, some people don't even want a pool. Too much maintenance if they're not going to use it. So, yeah, I don't know, man. Like I said, dude, it seems like out of nowhere the past like 2 to 3 years, everybody I know has the latest and greatest everything, regardless of how much money they make. And I'm just like, when did everybody get rich, or is just everybody in massive debt? I don't really know the answer to the question. It's a weird situation.
It is a weird situation. Kind of goes back to just investing in general. It's like, if everybody took this extra money and they invested it and they planned appropriately for the future, I think as a country, we are going to be more well suited in the future and be able to compete with some of these other countries coming up that are more frugal because they're used to like not having all these things. India is a prime example. Like, one thing that I have been really slacking on myself is not looking at opportunities outside of the U.S. when it comes to investing. And I think India's market is an extremely, viable place to look. Like there's so many things happening over there, and they're transitioning from like the second world to first world. It's depending on who you ask, they can be both first world and second world and kind of third world at the same time. Depends on where you go. But that entire area, that entire population is used to living off of fixed incomes. And so the money that they invest, it seems like it goes a little bit further. U.S. money gets spent like crazy, especially when you get to the government.
Yeah.
My God, man, they charge out the ass for everything. So I think there's going to be some pretty insane opportunities when you look at foreign countries and, and not even considering crypto as an investment, just standard traditional finance. When you add crypto to that, I mean, yeah, it adds a whole nother layer.
Yeah. I mean, I think that, looking outside of the U.S. is potentially a good opportunity. I think there are, up and coming countries that are out there that, 10 years from now, the landscape may look entirely different. So I think keeping your eyes open to that is important. And I think, obviously investing in general is obviously, an important goal. And I think everybody needs to, invest some money, whether it's in stocks, whether it's in crypto, whether it's in 401k, whatever it may be. You need to find a way to make money for you when you're not, actively doing it yourself, or else you're essentially falling behind the pack. So if you want to stay up with the Joneses and stay up with the pack, you need to be investing your money so it can make you more money. So in the long run, you can live an easier lifestyle. And if you're not doing that, you're kind of already behind the 8 ball.
Yeah, and one solid way to make money on the side is investing in Bread Bites bots.
Bread Bites trading bots. Nice plug. Nice plug.
Wait, what?
Yeah.
No, but I think this is a topic that we could spend a lot of time talking about, and I'm glad we were able to really kind of fit the 401k. This has been something I've been wanting to talk about for a bit, but we've been so deep into crypto for a while, and I think eventually 401ks are going to tie into crypto, and not just meaning like buying into crypto funds, but like actually being able to, like, this is your 401k. You have the freedom to make all the right choices, but also make the wrong choices. And if you want to buy Floki, for Christ's sakes, fuck it, right? You can do it. It's your money, and right now you could do that. You could take a 401k loan out and I'm going to put it all in cheap or whatever, and sit on the sidelines and watch it diminish right in front of you.
Whoa, man! Don't talk about sheep like that, man. Long term, that's a good play.
Hey, man, you did call the direction.
I did.
It had a nice little bump.
It did have a nice run up over the past 2-3 weeks, but yeah, I think long term, honestly, it's a good play. Honestly, I I wouldn't necessarily be opposed to taking a 401k loan out and throwing some money in that.
Don't you fucking dare, man.
I might
dare.
do that tomorrow morning. That seems like a good idea.
Well, we got to cut this from the cast, man. People hear this, are like, shit, Sheep's going to the goddamn moon.
Yeah, man. I would, yeah, I mean, it's not a bad idea, honestly.
I think it's a terrible idea. I think it would be horrendous. If you want to, burn money, at least you can keep yourself warm. You invest into Sheep, you're not getting
Top 20 token, baby.
There's not a lot of tokens out there.
Yeah.
That's like saying Zimbabwe's currency is, a currency for, everybody.
No, but Sheep, though, is for everybody.
Get the fuck out. All right, everybody. I think this is a good place to wrap up. Again, please tune in to our season finale.
One more episode left.
One more left. As always, you can follow the Crumbs on our socials at Baking Profits, at Bread Bites, at The Bread Maker, at DeFi Donut.
Catch you on the next one.